Today is Thursday, February the 13th, and I'm going to talk to you about something very interesting in the McClellan oscillator. But first, let's look at volume, which was average, what we saw yesterday and the day before. Decliners led advancers by a small amount. The market dropped at the beginning, then moved up. The NASDAQ, Tesla looked like it was going to be down about $20, $25, and then it started to pick up. Apple started to pick up. Amazon was doing well. So the NASDAQ still finished down. They all finished down. The New York Stock Exchange saw advancers and decliners separated by only 40, which is what we saw pretty much across all the markets, which means our stock market breadth now is going to come down just a little tiny bit. And there it is today. Now look at, remember we were talking about this point and this point and this point? McClellan talked about those in this article called Choppy or Simple Structures in the McClellan Oscillator, which you'll find, well, it's gone now, but it was in yesterday's subnote. You can go read more and you'll probably find it there. But it talks about what a complex structure is, and that's when you get movement above the zero line, above the neutral line for a prolonged period of time. That means that the bulls are in charge here, because the bears are not able to bring the money down below the zero line. Now here's where the bears were in charge, because we spent a lot of time oscillating back and forth until we finally hit the zero line. But for all this period here, the bears were in charge. The bears were in charge here, and then we popped up. We've got more happening here since this chart was drawn for his example. But look, he's pointing out these three lines which show that the bears are in charge. And you can see here when you had 1, 2, 3 with the bears in charge, we were able to break out over the line, showing that the bulls were completely in charge. But it looks like now that we've got this bearish complex down here, we could be heading down to bearish area. So we'll need a clean break here to start a new complex bullish structure. But for the time being, what we've got is lower high, and it's heading towards the zero line. So that's a simple structure, and it still shows that the bears are in charge. So this complex bearish structure, even though we've crossed the zero line into a simple structure is one that saddles both sides of the zero line. So that's this one here and this one here, both simple structures. But this down here is a complex structure. But because we have this trend line topping these three lower highs, we have to say that this simple structure is leading to a bearish complex structure. That's what he's trying to explain. The S&P was down 5. Let's go to our bigger charts here. Down 5. So still in breakout territory. Still looks bullish, right? But I'm still concerned that we haven't come down to touch the cloud yet. Apple only down $2. It was down a little bit more. It's finished with a perfect doji. Still can't break out from this area right here where it's been for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Caterpillar, 13 cents. We said that the cloud and the 50 would be resistance, and pretty much that's what happened. It came and hit the cloud, and it hit the 50, and that was exactly resistance. So in order to get bullish again on Caterpillar, we're going to have to see us break the 50 and break the cloud, or we could break the 50 and just trace along the cloud. And if it does that, we've seen it trace the cloud. It's not unusual to see things trace the cloud. Where can we see examples of that? There are examples all over the place, right down here where it traced the cloud. was unable to move up through the cloud, so it traced the cloud. Goldman Sachs, which I have a vertical call spread on, no action, very low volume. Shopify, up $5, but the thing we're looking at is the comparison to Amazon. This is what Amazon did on its day after earnings. This is what Shop did on its day earnings, exactly the same. Look at the volume for the earnings day, high, then low. And then the buyers came in. This had high volume, but also had high volume again, but unfortunately, it finished at the bottom, really at the bottom of its day's range, below the 200% Fibonacci. This finished at the bottom, not quite as drastic, but I'll take it. These are both looking similar enough to me that if we get the follow through tomorrow, then we're off and running with Shopify doing just what Amazon did. AT&T up 27 cents. Tesla, wow, up $31 after it dropped because it had released an offering of $2 billion worth of shares. The criticism was, with the price of your stock the way it is, why didn't you offer even more shares? But they didn't. So that caused the stock to bounce back up, and it's just above the 300% line. So look, I'm still short a couple of contracts that are sort of hurting right now, down $250. I'm prepared to lose $400 before I get out of that trade. That might happen tomorrow. What else do we want to look at? Splunk. It made a new high, pulled back, and created a new closing high. Tomorrow should be the day to move in on Splunk, but the volume today was just pathetic. So let's keep an eye on it tomorrow. Cisco down 272. So this was after earnings. Cisco recovered a little bit. The volume was really quite high, so that's encouraging. We should look for doing a Cisco. I want to go back to the Cisco chart here, Splunk chart here. So this 173.23 that we're looking at is the 178.6. So we're still going to keep our alert there, and that's when we buy. We have a confirmed move over there. And Cisco has got this gap to fill. It stopped at the 50. So let's put an alert here, and let's say when price crosses the 50 SMA, we're going to come and take a look at it and maybe step in and nibble on some April contracts. We're going to see resistance up here at the 200, but there's still room, there's still some money to be made between where we are now, not very much. But you know, the safest place to buy it would be over the 200. You know, it makes a new high. But if our theory that cybersecurity is the place that we want to own some stuff, and Cisco is the one that the analysts are recommending, then this is the one we're going to keep our eye on. And as soon as we see some bullishness, although the SMIs are looking bearish, we're still not ready to move in yet, but we'll keep an eye on them.